Welcome to
the Total Money Management Podcast. You got me tongue twisted now, Mr. Stephen.
That was like take 47 of the
That
first
was not
line,
take
Thomas.
47.
the nightcast version, the night version.
It's been a long week, all
No
right?
coffee.
The week that was.
Gentlemen, markets, what the hell?
It's all happening.
It's all happening, but they're not really moving.
It's-
Nothing shakes this market.
That's exactly right, Jacob. It's like, I mean, honestly, we've just bombed the shit out of Iran. Everyone's gone, oh, cool, bullish.
Oil went good for about a day.
Oil was like killing it 10% in 2 days. Righto, send out the email list and then retracted all the next two.
Yeah. Oh, I was telling people literally at work. I was like, I should have bought oil 2 weeks ago, guys.
Yeah, I know, but
We
it's
should have
still
gone back to the days of trading oil on very aggressive leverage.
Yes.
well, it's still done
So
all right.
fun.
It's still done all right.
It's done well.
Yeah,
It's still cheap.
but it's not funny. It's the trap that you constantly fall into of, oh man, I should do something now, right? And it's like, why? If it went up 10% over 12 months, you'd be going, yeah, it's all right. Yeah, that's cool. But when it goes up 10% over 2 days, it's like, okay, do I rebalance? Do I buy? Do I sell? What do I do? And it's like, nothing.
Just chill out. Well, to your point, I forgot what lesson it's under, but the volatility cluster, and it comes in waves. So up and then a couple of days and then down, and you wipe.
But that oil thing was on basically the belief that was never, and I think we said it's not really correct, that they would close the Strait of Hormuz and that would cut off a lot of the oil supply. But they were never going to do that, and they can't really do it anyway. You know, it's not like it's a door where you go, we took the keys away.
I was looking at how it's pretty wide.
Yeah.
It's like 20 miles
it's
wide.
pretty wide. And there's a lot of American ships there too, with big guns on them. So, you know, the last thing, plus you got to remember, Iran is selling 89% of Iran's oil is exported to China. Right? So, you know, the Chinese were kind of going, no, dude, don't close the strait. Right, because they're getting really cheap oil because it's sanctioned.
Yeah, well,
so,
there was an article on CNBC posted this afternoon. China's secret to cheap oil, just keep buying from Iran.
Yeah. So, you know, it's so funny, the global system. Everybody just tries to... I read something again this afternoon about China is now setting up factories in Africa to try and export to America, right? Like... everybody's just trying to game the system. And it's you can see why Donald Trump and America have got the shits, you know, because everybody just wants to, like the Japanese, the bloody Germans, everybody just wants to export, but nobody wants to import, right? But they all want the Americans to fly over there and, you know, belt their next door neighbour if there's any trouble. And it's like, well, you know, I'm amazed they've got away with it for this long. And I was just thinking this afternoon, because, you know, people's calling Donald Trump crazy and all that stuff. And, you know, part of it's probably true. But you think about it. If you're going to commit total change in a global system, well, you know, what are you going to... I mean, he's there for 4 years.
You have to be a bit crazy to want to do that anyway.
Yeah. I mean, you got to be belligerent. You got to be pushy. You got to be prepared to break the rules. You know, like there's a whole heap of stuff. And the reason why I brought it up was I recall when Ronald Reagan was in and Margaret Thatcher were in, right? And they were breaking the rules back then. You know, Thatcher crashed the unions, right? And all that sort of, and it was ugly.
Those riots.
It was ugly stuff. And that was the same thing, you know, like she was hated, right, as much as Donald Trump was hated. But some of it was a necessity to change the system and get things sort of going again, you know, and that's what Trump's doing. But, you know, he's not going to go down as being, you know, popular among a lot of places. But this week, right, NATO and the European countries said, okay, we'll spend 5% of GDP.
Oh, did they agree on 5? That's huge for Europe.
Mate, that's enormous. Look, and I think I said in the week that was recording this morning, that will be big for Europe, you know, because now they've got to spend a lot of money. Well, that's going to create jobs and defence companies and And what we've been talking about, okay, where do we get the rare earths from? We need computer systems. We need to update our AI. We need to really get it together. And the choice is, like the UK said, they're going to buy 10 F-35 fighters with nuclear capability. So, I just keep looking at it going, oh, man, it's just going to be a shit show and it's going to be war and, everyone's arguing and bombing and, Albo will be next.
Well, I was just thinking, what are we spending at the minute on defence?
We only do about 2, which is actually not that bad. I think we talked about boosting it to 3.5, but Trump wants 5.
Just across the board 5.
Basically, yeah. Well, across the allies.
Yeah.
But Trump wants 5. And I think we'll get there. It's just a matter of, again, you get all this dodgy, we built a school. Oh, that's defence spending. Better put that one down in the 5%.
Technically, we're defending the intelligence.
Yes. And some of that is valid. But, the Europeans are shockers at that stuff, right? Particularly the Germans. But they're going to spend a lot of money. I read this morning where the Germans said, righto, we're not funding any more NGOs, non-government organisations, to help immigrants, that come by sea. They turn up in a boat. Hello, we're here. Can I have a house? Now the Germans are saying, no, we're not funding that anymore. Right, so there's a whole raft of things that are going on, and that's why, previously we didn't need to talk about geopolitics because it was, what's happening? Nothing. We're all selling stuff. Cool. Whereas now,
Cape's high. We haven't seen that for a while.
Right,
Cape's high, but it's still high.
Just
so you know.
So,
well, we almost had to rebrand into a political podcast.
Yeah.
Well,
total geopolitics.
Yeah.
But I think it's important, Tom, because
that's
what I mean, though. A lot of younger people and guys your age have never had to deal with it.
Yep.
Yeah.
Right? And that's why I'm saying, look at oil, right? If you didn't know what was going on, you'd be going, what the hell's going on with oil? We're sitting there going, yeah, Strait of Hormuz. Oh, right, okay.
Yeah.
So, that's what's really important for investors to know, because that's the sort of stuff that's going to move markets really quickly, right? Next 2 weeks, the tariffs are back on the table, right? July 9.
Has it been 90 days already?
Sorry?
Has it been 90 days already?
Yep.
Jeez.
So, there's all this stuff rolling through where it's going to impact the price of companies and markets. That's why it's important that you got to understand the geopolitics of it.
Yep.
So basically, defence stocks continue to be one to watch.
Well, and commodities, right? As we said last week, look, you want to build bombs. Well, that's nice. Have you got any rare earths? And China this week companies are saying we can't get the magnets, right? The Chinese are, let me look at your application. It's like, dude, we need the magnets. So the Chinese, they're playing hard.
Magnets.
That'll be the title.
Permanent magnets.
Where are our magnets?
What are permanent magnets?
You need magnets for a lot of energy sort of stuff. But that, like EVs, electrical vehicles, you need magnets, right? And batteries.
I'm getting flashbacks of neodymium all over.
Oh, right. Hey, well done, bro. You got the work in.
Making
right?
it.
Now, shall we introduce terbium?
No.
Shall we introduce terbium for you?
You'll crack me up.
Okay. Gallium? How about gallium?
I've heard of gallium.
Okay. All right. That's good. Praseodymium?
Praseodymium.
Right.
Yeah.
Okay. You're getting there, mate. You're getting there.
I'm listening to you. I'm trying.
Listen. Next dinner party, lads, you'll be able to just throw it up. Oh, I don't like the price of neodymium this week. Oh, shit, what's he talking about, right? You'll be able to drop that into conversations, mate.
Got any rare magnets?
No one's going to want to. No one's going to want to talk Bitcoin, mate. They're going to want to talk terbium and gallium.
Well, let's get in the magnet game.
Right? What is Biddy, by the way, lads? 110?
Still about 107 this morning, yeah.
Oh, okay.
It's been a bit volatile.
US.
Yeah, of course, Tom, of course. Like oil. Quote them in US dollars.
Peter Bernstein, the only time you're really diversified is when you have assets you don't want to own.
Yes.
That's a good one, that Steve.
Like cash. right?
Yeah.
Like cash. Nobody wants to hold cash when the market's going gangbusters. But it won't go gangbusters. Hey?
When it's
Like
got-
Woodside.
Yeah.
when it's
Let's
going
plan
gangbusters
9%
the
for
other
God's
way.
sake.
Yeah.
I've already said enough of that. Let's talk about, what can I rant on now? Property, of course.
Yeah, well, we haven't talked about property for a while.
Yeah.
What, like a week?
We've mentioned China. We haven't mentioned Doritos. We haven't mentioned property yet.
Or Elon Musk.
Yep.
Musk
It's like
hasn't had a
word. We
mention.
should set up a word bingo card.
It'd be so predictable. I got it right again.
Bingo inside 30 seconds.
Well, Aussie economy, it's, well, the housing economy of Australia.
Yeah.
It hasn't really gone very far, but most of it is due to the growth of house prices. So
Yeah, the wealth, I think we've gone up another, I don't know, $84 zillion because of house prices and stuff. But the economy's still shit house. It's still teetering along. And everybody's still whinging, on Twitter anyway, about government debt and all this sort of thing. But we're not spending much money.
Well, Queensland government are giving us a bit of money to buy houses.
Cooking up a scheme. You only need 2% deposit now.
Oh, yeah. Well,
Yeah.
you know how that's...
Don't worry if you can't save a deposit. Just
The
get a
repayments on
mortgage.
that are ridiculous.
Well, in all seriousness, eventually you run out of buyers, and that's when it stops. That's what happened in the US, right? That's why they had ninja loans, right? Who the hell are we going to get to borrow more money? You see, because and it truly is a Ponzi scheme. You've got to keep credit rolling, because the people who want to sell to the people who want to buy, the people who want to buy say, yeah, I'd love to, but I haven't got any money. Along comes the bank, 2%, and here's $1 million. Great, I've got money. Then you can sell, right? So you've got liquidity. But once the bank starts saying to people, listen, we're tightening up our lending standards, or people go, we've all got a property, no one else needs one, that's when the prices start to fall. And it's not, as I say, it's not me making shit up. This is stuff that's been studied for a long, long, long time, right? It's just a lot of people don't want to pay attention to it because they're benefiting from it. And that's fine, but you just, need to get in there with your eyes wide open.
Don't forget about the Olympics, Steve.
Yes, that's true.
Well,
but I noticed the bloody investors are back in the market, right? Like, I mean,
yeah.
Well,
with new investor loans, they've risen heaps over the last 18 months or so.
Yep.
But on the US thing, just interesting, we might have mentioned it a few weeks ago. It's the first time in a long, long time where now the sellers outweigh the buyers in America. Yep. So it's one to watch. Just if you're interested, it's one to watch to see what happens with
As of right now.
Yeah, it's the spread's huge. There's heaps of sellers and not many buyers.
Did you see, I don't know whether you guys saw it, did you see that unit in Sydney sold for $141 million?
No.
Was it a complex?
Mate, I didn't click on it. I thought, I'm not giving them my
It would have been some
eyes.
drug lord.
But well, yeah, it's probably money laundering or something. But 141 million. I mean, honestly.
That's like 6 Bitcoin.
You wish, mate. Oh, lessons from history. What have we got here, Stephen? US stocks versus international stocks. We're basically saying there's outperformance. There's always outperformance of a singular class or stock market, and it doesn't last forever.
Yeah. I think it's starting to turn a little bit.
Haven't we just hit new all-time highs in the S&P?
Just
Again?
about, yeah. I think,
Again.
yeah, and in Australia. But Europe is doing really well. And that's why I'm a little bit more optimistic with the defence spending, because that creates a multiplier effect, right? Then you get more lending.
I'm hoping it's a triple top.
Yep.
On the S&P.
Yep. Or, what do those people call it? Maybe a head and shoulders.
Come and do our trading program.
So, yeah, I think, look, oh, God. The Cape's what, 37?
I haven't, it's up there.
It may be even a little higher than 37. It might even be 38 or something. But we got a picture of Cape in there. I think the next page, Jacob. Yeah, and just again reiterating that, when the Cape's really low, that's when you want to get in there, right? And there's plenty of countries and emerging markets that have got really low Capes.
What's a website that you recommend for people to check Cape for themselves?
There's a few.
Was it the Yard something?
No, there's one called multiple, but it's MULTPE, I think. It leaves out some of the like couple of the vowels. Let me quickly give it.
You can just go Yahoo Finance.
Yeah, MULTPL.
Yeah, MULTPL.com. That's really good. If you go up the top in the leftish hand corner, you'll see Schiller PE. You can click on that one.
Yep, 37.46.
Right, okay. Yeah. So,
That's ridiculous.
Hitting it out of the ballpark. But even look at the current the current PE ratio is 29.26, right? So it's double. The Schiller is 37, the long-term average is 17. Well, whether you fall down quickly or slowly, you're going to fall down. So I still think we're going to go – we might get a panic dip, but I still think it'll be fall down over years.
Like Japanese.
Well, yeah, or it'll take – see, again, that's why I'm saying we're moving to a different type of world. We're moving to a world where financialization of everything is not going to be happening. So, again, it'll be more about building stuff, right? So American wages are doing quite well, right? Well, we're not used to that, right? We're not used to having wages going up at 4 and 5%. And it creates a whole new dynamic. And that's why I say when you look at it and go, oh man, there's a lot of businesses going bad. This is not good. My argument is no, they're just the businesses that should have gone broke 10 years ago, right? So when you lose your local coffee shop, sorry, that doesn't say that, there's a problem in the economy. What it says is that the investment boom in America is commanding the workers, and the workers are going, well, I'm not working at the coffee shop for 16 an hour when I can work down at the building a factory and getting 22, right? So that's why I'm saying there's a different world coming, and you've got to look at it in that new framework, not the old framework, right? That's the really important part for investors, because what you'll find is over the globalized economy, a lot of the success stories are global, right? Well, that's going to change, because if we're going to export less to China, or they're going to export less to us, that's a guarantee into the US. Well, what that means is that there'll be local US firms that will go, this is great, right? We don't have to try and compete with China anymore, right? Because there'll be tariffs, or there'll be non-tariff barriers, or there'll be regulations and stuff. That's why China's busy trying to find a spot where they can, what they call transship, right? Build stuff in Thailand, and then Thailand can send it to the States. But the states are wired to that. That's why they tariffed everybody.
They're not silly. But, I mean, it seems like we're heading into a bit of an inflationary chapter for the next chapter, 5 or 10 years, whatever that is. But what's that going to do for, like, the US dollar, like the worth of it, the US dollar, or any currency for that matter?
Yeah, well, it depends, is the short answer. The US dollar is the reserve currency of the world. Now, you would expect that would decline, somewhat. The high demand is a result of the Japanese, the Chinese, and Europe, but predominantly the Germans, all buying US assets, right? Treasury bonds and buildings and all that sort of stuff, but mainly bonds, right? Now, to buy bonds, what do you need? You need US dollars, right? So the US dollar is strong because there's always a constant demand for it for these countries to turn their trade surpluses. So instead of, you got to think in that form. When China sends America stuff, if it was paid in yuan, the yuan goes back to China, and China says, hey, give everyone a pay rise. We've got, lots of yuan. But the Chinese don't. What they do is they say, no, leave it in the bank in America, and we'll buy treasury bonds, right? And that's what the Japanese have been doing for years. That's what the Germans have been doing for years, right? So now the Americans have said, well, that's got to stop, right? It's just got to stop. So that's why they're all complaining. about, oh, well, we don't want car tariffs and stuff like that. And it's like, well, hang on. You've been keeping our cars out. You've been keeping everything that we produce out, but now you want us to continue to, take all your cars, right? And that's where Donald Trump has said enough's enough, right? And they hollowed out the American military industrial system. And that's when Trump said, okay, we need to build our own supply chain, right? We talked about that a while ago.
Yeah.
I mean, it's crazy. It's absolutely crazy. You buy permanent magnets off your enemy to put into bombs that you point at your enemy. I mean, there's not a dumber system than that.
Well, it's built around the financial system, right?
That's exactly right. That's economists going, oh, it's all really good for free trade. Well, yeah, but what about national security? Right? That's why I say to you, you don't have to understand it like you're an expert, but you just got to be aware that there's issues now that change the value of companies really quickly because of what's going on in the geopolitical space.
The national security space.
It's bigger than just the margins that you can make by buying it cheaper overseas.
Yeah, absolutely. Yeah. Absolutely.
Well, some of the hot topics this week. The first one is using the stock market as a long-term savings approach and ignoring valuation. So we kind of touch on this a lot, but people are basically, it's so easy to buy into the S&P now, right? You go on your phone, click, or go into CommSec and buy the ETF.
Plus, it's the typical advice or feedback that you hear over the dinner table. Just buy Vanguard or buy an ETF,
buy and hold. This is what it's returned.
Put a percentage of your pay slip in there; it'll grow at 10%.
Yeah.
Doesn't matter when you buy it, dollar cost average.
Yeah. But we want to talk about the valuation, and that's why we make these podcasts, to let people know that that's actually not true.
Yeah, well, valuation is there is really nowhere where people blindly buy something other than the stock market, right? Where people go, cool, everybody's buying X.
Or Australian property.
Or Australian property.
Or coffee.
Or coffee. Yes, but coffee is addictive. Probably like Australian property.
Yes.
But yeah, the valuation story, and the problem is that because something's been overvalued, and I saw this today on Twitter. There was an argument about property, this constant argument about, it'll never go down. And what people don't realise is the longer it goes, the more it's actually going to go down, right? Not the less that it'll never go down forever. It will go down. And if it goes down quickly, that's awful. If it goes down slowly, that's awful. But it's not going to go up forever, right? And it doesn't matter about immigration or land planning because those can't continue forever either. So, and that's why you do the compounding sums by saying, well, if property's going up at 7% per year, okay, that means it doubles every 10 years, right? Which is what you hear all the time. Okay, that means your average Sydney property will be somewhere around $3 million, right? Dollars. Okay, well, that means the average wage would have to also grow at 7% to maintain the current price income of 11, which is historically double. So do you see what I mean? You've got to look at it, and it's the stuff we talk about with Tesla, where people go, robo-taxis will be worth 25 trillion. It's like, dude, that's not the way it works, right? You can't extrapolate out that far. And that's why we said in one of the early property podcasts if you look at Amsterdam, the canal there, where they've got property prices for 500 years, it's hardly gone up more than inflation, right? And they've had spurts where, it's gone up.
Yeah, like generational spurts. 20, 30 years.
Absolutely, where it's absolutely killed it. But then it spent the next 50 going nowhere. And then you go, hello, now it's back to inflation. And if you think about it logically, you can't have a necessity of property, rising 5 to 10% per year every year. You just can't do it because the incomes don't keep up with it.
Yeah.
Yeah, but there's not much logical going on.
Well, no, not
at the moment.
Well, no. That's why I say, investors are back in the market. It's like, Jesus, how many more are there? where the hell are they getting these people from?
Well, it's everyone that's already got one or two that's got a bunch of equity.
Well, yeah, and it creates more inequality, Jacob, because they're investors. They're not owner-occupiers.
If you're listening and interested in, we've got 2 or 3 property specials.
We've done 2. We've got another one coming up.
But if you haven't listened to the property specials, we go on about it for an hour, and there's facts, not just speculation.
Go on about it.
Yeah, we just don't rave. Stop it, Steve, stop it. Righto, what's the next hot topic?
Managing volatility. Can you use defensive strategies? We talk fairly often about asset allocation, and one of the things you may or may not have picked up on is with increased volatility, we adjust how often we rebalance.
Yep, absolutely.
One of the main things, right?
And it's hard to do. Yeah. It's hard to do because the market's going up, and it's like they've got this geezer on the bloody podcast telling me that I should be taking money off the table.
Well, it's your time frame as well. Like oil, for example, goes up 10% and then down 10%. You can't really do much about that intraday volatility.
Yeah, not in a short space of time.
But if you're managing volatility over 12 months, then you can probably set up a strategy. You can hedge.
Yeah, it's why the systematic approach is really important, because what you get a lot of the time is people pointing out, and I think I did it in the Instagram post today, right? Friday, 27th or something.
Yes.
Where this month the winners were, I think, Palladian Energy, right? Nuclear, right? It went up about 27%. 2 other companies that killed it, right? One went up like 100% or something. Jake, is that right?
Got Drone Shield 100%, Zip 49%, and Paladin 24%.
Okay, so now look at the losers.
Yeah, Rio Tinto -6, BHP -3, Fortescue -2.
Right, now they're the main 3 iron ore miners. But the problem with that sort of stuff is when you see it, you get this overwhelming desire to buy Palladian or Drone Shield, because they're going up. And that may work for a time, right? But what we're trying to tell people is the systematic approach, you will always, if it wasn't Palladian, it might be, a gold company.
Yeah.
Or it might be XTC, the NextDC, the tech company, right? The thing is saying, what's my chances of picking those companies, right? And the answer is really goddamn small. So stop it. You're not probably going to do it unless you buy everything and, you boast about the ones that go up, but you don't tell anybody about the ones that go down.
Yeah.
Right? And so that's why we say systematically it's really, really important, because you're not investing just for the month of June. Right? Or like you were saying with Woodside, it's no good going, oh man, the last 2 days I've made 10%, right? It's like, okay, so what? What does that mean? Did you cash out? No. Okay, well.
Yeah, are you going to never invest again?
Well, yeah, and that's what I mean. What if I said in 5 years it'll be up 45%? You'd be going, oh, great, I'll hang on, I won't sell any. That's what I mean. You've got to think systematically about the process of investing, right? Not just... And they always highlight these companies, right? Well, somebody's got to do an above average month, right? Somebody's got to do a below average month. That's the way the average works. So the question is...
What's the saying? The best of the worst meets the worst of the best.
The best, yeah.
Is the average.
But yeah, you can, if you think defensively, generally you'll end up wealthier than people who are shooting the lights out and, trying to pick the latest winner. Because by the time it's won, it's over. You should have been at, what did Drone Shield go up? Like 100% or something. It's like, well, you should have been there in the 1st of June.
But the people would have...
And no doubt somebody was.
Yeah, but they wouldn't have tipped their whole life savings into it, right?
No, that's right.
It's a percentage of. So...
That's what I mean.
That's the nutshell. You can use defensive strategies, but it's better to have a strategy in the first place, I guess. Yeah.
Well, one that's repeatable, right?
And we've already spoke about the third one. Trade wars hotting up. Commodities are front and center. We've spent the last 10 minutes talking about that.
It's going to... I think we're getting closer to where commodities are going to start to outperform. And I say that because the trade war is just getting worse, right? Like, as I said to you at the start, China's just going, you're not getting our magnets. So we're going, okay, we better get something done. And there's movement afoot now in the US to start building, factories, energy, all that sort of stuff. And that's going to create a building boom. Well, what do you need? Iron ore and, lots of resources, right? Water, infrastructure. I mean, the AI demand is enormous in terms of energy. So, there's plenty of things there where I think Australia will be happy to provide lots of that sort of stuff.
All right.
What else you got to cover, Steve?
That's about it, I think, folks.
I think that's a wrap.
Done.
Sort of
on time. 30 minutes.
All right, great. I'll see you guys next week then, hey?
Thanks for listening.
Cheers, folks.
Cheers.
As always, remember, we don't provide financial advice.